So to get reaction to these numbers, let's bring in Brian Nagel of Oppenheimer. He has a buy rating and a $120 price target on this stock, which I should note would mean Nike doubling to reach. So your reaction to these results that Sarah just laid out for us?
Well, good afternoon. No, look, I think Sarah did a nice job of breaking down the numbers. I mean, for me, the real key as I'm looking through this report is this was weak as expected. Okay, Nike very much telegraphed this weak quarter. There's a lot of, just like Sarah was saying, there's a lot of internal repositioning efforts that are done. But what I think is most, at least is from the release, what's probably most important is the commentary in there from management that they're basically saying, look, this is it. This is the bottom. We're getting better from here. Like Sarah was saying, they're going to have the conference call at 5. I think they're going to talk a lot about the new product introductions, maybe some early reaction to those new products, how they're reestablishing these relationships with wholesale. Like I keep telling our clients, and I put out another report on Nike earlier this week, I don't expect any type of all clear. Okay, that there are challenges ahead, internal and external. But I do think this is probably the worst for Nike. And through fiscal 26, which they're now in, I think results get gradually better. And that's where I think this stock really works, because right now it's heavily underowned. The sentiment is very negative. And I think the stock starts to work on these better results.
I mean, North America, better than expected, still represented a double-digit percentage revenue decline. China coming in worse than expected. We know there's trade and tariff and supply chain dynamics here. How much does that factor in when you are thinking about that differential between hitting a bottom and then recovering if you're Nike?
Yeah, look, I mean, tariffs are a big issue, right? I mean, across all the names I cover. I cover a number of names with across discretionary consumer. I mean, tariffs are a big wild card. What I'd say right now, what I'm hearing from our companies as I'm talking to them daily is that if the tariffs stick with what we're hearing, the now more muted tariffs on China and definitely more muted tariffs elsewhere, it seems like these numbers are pretty manageable. Okay, the risk is that the trade war escalates from here, and we don't really know. I mean, that could happen at any moment. But again, what I'm hearing, I think this very much applies to Nike, is if these tariffs stay where they are, or maybe even get better, that's very manageable. And I think from that's so to say a backdrop that Nike could continue its turnaround.